I'm not trying to pick a bottom. This is a significant draw where price can go down into. And if it gets into that, because there is no wick and there is no body between these two candlesticks, I would expect to see a lot of acceleration quickly until we get down to this candlestick's close. And then treat all this in here as a low resistance liquidity run, meaning that it can do a lot of the go down a little bit, come back a lot more, go down a little bit, come back a lot more, where it's not just real quick slicing through. Okay, so just be mindful of that. And also, if you factor in what I taught you, because this is a daily chart here, we have this liquidity void. You want to do your ranges. I gotta take all these off. Pardon me 1 second. All right, so now we have our high, low, consequent encroachment, upper quadrant, lower quadrant. So now we have levels that are much more meaningful to us. So these are all specific price levels that you should have on your S&P chart. If we take out this low, these are going to be impactful until we get down into the close of this up close candle and the open of that candle right there, which is essentially the open lining up with the consequent encroachment of that liquidity void. So essentially what I'm saying here for folks who don't see the importance of even caring about this area, because there is no trading at all. And I know some of you are thinking, well, Michael, it's so spotty. It was not really being traded all that much then. So why would you use that? Because it's there. Because it's in our active front contract right now. Until we get to expiration in December, which is weeks away, month and a half away. A lot of things can happen. Like it could get way beyond this level lower than just that. But because of purposes of looking for where the market could draw to, why it should draw there, on a horizon that could be measured with, practicality. We're talking about the entirety of the month of November still, and half of December before we roll over into March 2024. So when this December contract expires, we'll be rolling into March 2024, but there's a lot of time between that becoming a factor and becoming the front month of S&P trading versus where we're at right now. This is a factor that you need to be measuring. So I'm always looking at those spotty points of the contracts that I'm trading during times when it was illiquid, because the market's going to refer to those price points. Why? Because the algorithm is booking price on what? This contract month. It's not doing it on March. Everything that's being controlled and manipulated is done on this contract right now. And when we roll over in the March 2024 contract, all the parent contingent ideas that deliver book price will be based on that March 2024 contract. It's not rocket science, folks. I mean, I know it sounds like science fiction to a lot of you because you have a vested interest in this industry. You do want to be laughed at by your your coworkers. You believe in an algorithm? You silly son of a bitch. Whatever, dude. Stay in your clicks, but you ain't never going to have this level of precision. All right, so let's drop down into a 4-hour for ES. All right, so we have a gap down here. What kind of gap is that? Does this high, look at the high up here, okay? Look right up at this price level. That candle's high comes in at 42.5. The low on this candle, right here, the low on that candle comes in at 43.5. So there's a difference, or a real gap, a liquidity void of one handle. So from 43.5 to 42.5, there's one separation between those two candlesticks. That's a real liquidity void. So you want to have that on your time frames, at least the 60-minute and less. That might be a factor for price to want to go back down in there and revisit, even if we are going to make a low. I'm not saying we are, but even if we were to make this low, intermediate term or long term, I would be still factoring an interest in that between now and 8:30 on Friday. There's a volume imbalance inside of this fair value gap with volume imbalance on a daily chart. Remember this shaded area here? That's on the daily chart. Let me go back up real quick. I'm sure I'm going to lose some of you. This volume imbalance right here, and this candlestick's high, and this candlestick's low. That would be normally the fair value gap. It would look like this on my chart normally. If there wasn't a volume imbalance there, that's what you would see. But because we have the volume imbalance, we're factoring that in too. Okay. So now let's go back down into the 4-hour chart. We have a volume imbalance there that's visible as well. So even on the daily chart, dropping down to the 4-hour chart, you can still see it's very, very distinct. There's no bodies laying between these two candlesticks, close and open. So it could draw up into that this week, is what I'm saying. I'm not interested in taking any more trades, but this level down here, that volume imbalance, that liquidity void, the actual gap that has a one handle gap or vortex of a gap, you should have that highlighted on anything from a 60-minute down. And this area right up in here, since we can see it on the daily and on the 4-hour, this is what you should have on your chart. So there's your up and down, your premium and your discount, as it is right now. That's just saying that we don't need to go outside the range of this swing high. Why this swing high? Because it's the swing high prior to this one, and it's got a higher, it has a lower high rather to the right of it and a lower high to the left of it. So this swing high is important to me. If it wasn't there, then I'll take my attention to there. But this is the only one that has a swing high until we get to this point here. But we're not interested in this by in and of itself because the volume imbalance here on the 4-hour, which is what we're looking at, and it's also the same area on the daily. So this little segment of price action is above where we are at market right now. Market price is here. So discount, my interest is that liquidity void of one handle or 4 ticks below us. And the premium level is this volume imbalance. And now, how would I use that information? I would look at that at 2 o'clock, and the 3 o'clock, and the 4 o'clock and see, does it want to draw to either one of them? Does it give me a silver bullet? Does it give me something tomorrow morning that's going to be obvious that's trying to get to either one of them? And if it offers you a framework that allows for 5 handles and not a lot of risk, then there it is. So for the folks that don't have the skill set to be able to take a trade, you simply use these levels to study which one does it gravitate towards. And then look at the price action after it does that and see, was there a silver bullet there? Was there a Model 22 entry? Was there an optimal trade entry there? Okay. Or was there a breaker that you can use to get to either one of these levels? And that's how you start. Because if you don't know what you're doing, you have to have a framework on how to trade, how to practice and log things. And that's what you're doing. And in the beginning, it's going to seem counterintuitive to be doing that because you think you should be pushing buttons in a demo account when you're going to just simply feed yourself bad experiences and learn nothing except for concern for the outcome, which is what you want to avoid before you learn how to follow a model. And then certainly before you trade with real money. So again, just a reminder, if you're learning anything, that little thumbs up button, that's a testimony that you are learning, not just listening. All right, see how clean this is here? That in there with the bodies to this right here, that's relative equal highs. I like that. So I think that this is something that you should have on your chart for a premium, meaning that it's likely that they'll want to go above that. Folks that see this high today, they're short. I wouldn't want to be short in this, but it's likely that they might at some time between now and Friday, they'll want to clean that area up. If they do trade through that, then I would want to see, does it want to stay above that and not quickly reject? Because as long as it doesn't quickly reject, we would anticipate trading up into that area here, which is the inefficiency that we've seen on the daily and the 4-hour. Now we're on the hourly chart, and now this becomes what? Look how it's refining down into a actual liquidity void where there is no trading between two successive candlesticks. So between this candle's low and this candle's high, there is no trading, zero booking of price, buying or selling, nothing. So this is a real what? Liquidity void. Should it be defined just like this? Is it accurate to leave it just like this? No, you shouldn't. Why? Because this candlestick here did what? It pressed into it a little bit. So this needs to be augmented to show this candlestick's high. Then draw it back to this candlestick's low. That's the refined levels. So the void is between this candlestick's low and this candlestick's high, because between when this formed all through here, this candlestick went up into it by a little bit and went just above this candlestick's high. So the inefficiency is now redefined by this high and that low. So this is what you should have on your chart. Okay. All right. So 15-minute time frame. Yeah, this guy's long-winded, isn't he? If you were paying me, you'd want it to be just like this. Don't shortchange me on ICT. Don't be going shortcuts, okay? I want to know everything. All right, so we have, well, this is interesting. We have low, lower low, and this high in here. So if we get above, let's say we get above and sweep all this area here that we just outlined on the hourly chart, I would want to see, if it was the correct lower, I would want to see it be supported by this potential breaker. Okay, so we have a low, high, lower, low. If it were to take a run above that 41.87 level, it's allowed, it would be permissible for it to drop down into this high in here, but it would have to be supported by, let's go into the 5-minute chart. It would have to be supported by this up close candle here. Because that would be your bullish breaker. So, meaning that it has to go through that, show no respect of it, okay? So this is also something I'm going to talk about in my books, but just to prove to you, you shouldn't feel this over excitement about buying my book. I'm not trying to peddle to you to get more money, okay? But I'm going to teach you something here that I will talk about in the book. But because I'm showing it to you over a chart, it's going to be a little bit more impactful. You've seen me doing executions where I'll label a breaker, and I'm entering inside of the range that's defined as a breaker, whereas you classically have learned and seen me define the breaker being utilized after it gets above it and comes back down. Then you see me buy it. That's the low level understanding of a breaker. It's a very simple conceptual idea. But if I'm bullish, okay, if I'm really bullish, I can use a lower time frame entry inside of this, knowing that I'm positioning myself within order flow, that later on, if it comes back down, touches again, that could be a pyramid entry for me. But if it goes above it here by a little bit and rapidly trades down below this low here, then that to me is problematic for it to go up into the 4-hour daily and then refined area up here we have as that liquidity void. You follow what I'm saying? So there's an hierarchy to using all these things, and it's not an easy thing to explain for someone to watch one time and understand right away. Okay. See how fast we rolled up into it there? That stuff can happen at an instant, just like that. So there is liquidity resting right above that 10 o'clock high. You want to measure how fast it wants to reprice above that, if at all, okay? But this breaker is also something, if it fails to go higher, every one of my PD arrays can be used like an inversion fair value gap. Every PD array has an inversion aspect to it. So if we were, for instance, let's say this, say I was hardline bearish. I was really bearish. I could take a short in this as it's trading rate where it's at. I'm not saying that's what I want to do. I'm just saying that if there's an instance where I am bearish, I would sell in that like that. And if you watch me do the executions, and I've done this before for students, they're like, what are you using there? It's the fact that I'm looking at something that would otherwise be viewed, if it was viewed diametrically opposed to the sentiment I'm using in trades, it would be used bullishly. Same way I use with the retail logic. If I talk about a trend line phantom, where it looks so obvious that there is some supposed diagonal support or resistance, if I can clearly see that in the time frame I'm looking at, I know it's going to draw to the midpoint and draw to that liquidity. So what am I doing? I'm capitalizing and attacking retail logic. How's that rebranding retail logic? It's not. I'm opposed to retail theory. So I'm looking at it like I have a disdain for retail theory because it's bullshit. That's what's leading you astray. That's what you're losing money on. But you keep looking at it and coming back to it like a dog to its vomit, thinking, I need to eat this or I'm going to starve. I'm never going to be able to do it unless I do it this way. And you have to put it down. Leave it alone. Don't touch it. Learn to identify where it's in price. And the way I'm teaching you how the market's likely to draw to specific price levels, that draw on liquidity, if that draw on liquidity is opposed to what you see from a retail perspective or theory, chances are that retail theory is wrong. That's what I'm trying to communicate. I'm trying to communicate that as a beginning basis point. Because if you can get to that point, it's real easy to hold on to learning and practicing until you get good at your model. And then it becomes really fun because then you can go into any time frame using that model and find something that builds your courage up every single day because you have something you can measure. So there we have the little short-term high from today's intraday high. And then we're trading right back down into that breaker. So it's a 1 minute chart. What time is it? It's 1:32. What time did I start this thing? 11 something? Let's call it 11:15, so 12:15. So we've been going about 2 hours and 15 minutes. I'll try to wrap this up by the time we get to 2 o'clock. Keep going, ICT. Come on, man. Let's go to a daily chart. Look at the Dow. Dow. YMZ2023. All right, we have a small little fair value gap. What kind of fair value gap is this? Before I draw it out, what would you call it? Right here, what was that? What's that one called? What's the little thing I told you that you remember? Determine what is a specific fair value gap. A down closed fair value gap is a SIBI. An up closed fair value gap is a BISI. So this is a SIBI, sell side imbalance, buy side inefficiency. From here to here, right? Right? Is that right? No. What's here? Volume imbalance. So you have to incorporate that. So that's what you should have in your chart, okay? Now, because it's on what time frame, what's up here? What's this? This is a daily chart. You want to be able to add your quadrants, okay? So these are very specific levels. It's not a fucking zone, okay? It's not supply and demand zones where who the hell knows what you're supposed to trade off of, okay? It's very specific levels that we're looking for. So on a 4-hour chart, we drop down. Okay. So the market's drawn back up into this area here, right above this short-term high. This up close candle, I would not call that an order block. Why? Because it's outside the range of that daily fair value gap that's also incorporating the volume imbalance. So all of this movement back in here, I would discount all that. And I would look at a up close candle above this area here to be my bearish order block, which would be this one here. Okay, rules, folks. Rules. That's what's going to be in the books. Not every up close candle is a bearish order block. So if we have our lower quadrant level here, does it want to get to that lower quadrant level? Does it do so speedily? And does it close above it when it gets there? If it doesn't, that's suspect. That means it might want to revisit all this down here. And this area here, between this down close and this up close, this little segment of price action right in here is a balanced price range. So it'll take a more meaningful move to get below this. So any retracements could be met with some kind of support in here. If we lose this area here and it comes back up and touches it, that is, in my opinion, potentially very bearish. But I can't stand the Dow. The Dow is very, very fickle. It's spotty. It doesn't want to listen many times what the other ones are doing. But it's usually very helpful when it comes time to looking for intermediate or intraday SMT divergences, where the Dow many times is the one culprit that will say, I'm not listening. I'm not going to make that lower low, or I'm not going to make that higher high, where the NASDAQ and S&P would. That is something that you want to add to your SMT notes, that if you have an SMT divergence that is using the ES as the divergence or the NQ as the divergence, those are going to be your stronger SMT divergences. What'd you just say? I just gave you some gold. True, yes, I'll take an SMT divergence if it's the Dow, if I'm really, really strongly convicted about the idea I think the market's going to go. But I usually demand ES or NASDAQ to be the divergence, because it's a larger degree of stocks, because the Dow is only 30. And those companies are, they're not what they used to be, versus 100 of the tech stocks or 500 of the blue chip stocks that are in the S&P Composite Index. So there's a little bit more weight placed on my SMT divergences when I'm using it as a catalyst behind the ES or NQ being the diverging index. So if that index is one of the two, ES or NASDAQ, I'm going to have a lot more faith behind that SMT divergence than it would be if it was just the Dow. So if I'm seeing it on the Dow, I have to have other things really siding with me that it's going to move. Otherwise, the SMT is not going to do it for me. It's not going to be the thing for me to say, yeah, this is a good qualified trade. So just toss that in there, no extra charge. Just make sure that this is down here as your balance pricing, okay? And a 60-minute chart. Man, I'm doing a clinic today. Shit, I should have charged money. Could have got myself some cheesecake. All right, so here we have the hourly chart. Now look how this run here. From here, run. Don't worry about the shaded area here, because we did that after this forms. But look how it goes down here, runs up, trades above this high there. No inefficiency, because it goes immediately down into the order block. But where specifically does it go? What is this? It's a wick, right? Wicks are treated as a gap or inefficiency. So if we treat this range, when I'm watching price move higher or lower, I'm looking at every single wick. Let me get this off here. Don't need the quadrants for this. When price was up here, and if we thought price was going to go higher, go look at all of the times I'm trading. When I'm doing my executions, I'm adding pyramiding. If there's a wick that it's trading back down into, you'll see me entering at it. Look where it goes, right there. And what is that little movement below it? What's that called? A mohawk. It's perfectly permissible. That's exactly what the algorithm's going to want to do, to offer what? Smart money that has an algorithm that's going to handshake with it. Okay? Here's the conspiracy that most of you are going to say it doesn't exist. But I'm telling you, when you start looking for it like this, you're going to see it's there all the time. And then you're going to really have a problem sleeping at night, because you've been believing in Bollinger fucking Bands. So right in here, we have a consequent encroachment. That price level is 32,806. The low here is 32,801. So we're only talking about what? 5 points? And this is on an hourly chart. An hourly chart, and you're only talking about 5 points deviation below a consequent encroachment level. Are you going to be wrecked if you have to trade with something that allows for a stop loss that's just above 5 points in the Dow? And trusting in a logic that where you're entering there should be some movement that supports your trade and it should run higher? What's this over here? What's this right here? Same thing, right? Same thing this is. So if you look at both of them, what is it doing here? It's overshooting this one, but it has to refer back to this one as well, because it's also a wick. So it's a gap. 2 consecutive gaps in the form of a wick. So you have to look at that. That's real fucking order flow. You're not going to see that on a depth of market. You're not going to see that on ladders. You're not going to see it on volume profile. That's not, you're not even looking at this stuff. You're not looking at this, but I am. And I'm executing on it. My entries are fucking phenomenal. They're consistent. They keep happening all the time, using the same logic. I'm teaching you how I'm doing it. If you're bullish, you're looking at these levels. Even if you have already positioned your entire trade and you're not going to add anything more, you're still going to look at price like this. As it's forming in each new candlestick, does it go down to that level? Okay, it's going past a little bit. Okay, it shouldn't go beyond that. Now it should start to reverse here and create a long wicked, candlestick bottom or low, or what we call it, tail, I guess. Okay, and then it does this. Wonderful. Then we open here. We trade down. What's it going to? This wick right there. Does it need to go to consequent encroachment low here? It could, but what happens if it doesn't and it turns and starts rallying? What does that indicate? It's really bullish. There's no need to worry about putting a stop loss right below that low now or trail it up to that point. There's a logic behind everything I'm doing. I'm teaching it to you, but it takes time to explain it. You have to see examples of me doing it. What's the logic that I'm using? Why do I trust that the market's not going to turn around at this point? I'm teaching all that to you right now. But it's true to form. I told you it's not going to be easy 1, 2, 3 application. Like, you have to look at lots of things. And for some of you, maybe a lot of you, you're going to be like, yeah, fuck this. Just give me a supply and demand zone indicator and we'll call it a day. And hope I make money. Okay. Like I said, I'm not everybody's mentor. But for the freaks out there that just simply want to know why this market's doing what it's doing, I'm teaching it to you. Look how clean these highs are. See that? Look how it ran right up into it. That's not random. So even if you were looking at this price action right in here, all these wicks and stuff, I love that. I love when there's these wicks and convergences of tails and candlestick wicks together. And I have a bias, and I have a draw on liquidity. You can enter in all that. What time frame is this right here? What is that right there? 1 hour, right? We're going to frame this. Now, granted, this is the part where you're going to simply have to give me some latitude here, because I've already proven the shit this morning and for the last 2 years publicly. That's a draw on liquidity. If you start seeing all this back and forth in here and you see all these wicks, if you take that range here, and we're on an hourly chart, draw that here, and say you extend this out in time, because you don't know how long it's going to take for your setups to form, because you're waiting for a specific model. And we can drop down into a 15-minute time frame. Let me change this rectangle so that way you know what I'm looking at or drawing your attention to. We'll do it like this. Okay, so you can see there's a contrast, right, between this area here and this is a little bit more of a green hue. We're going to look at this area in here and see what forms. Because in here, order flow is accumulating new longs. Not because of depth of market, not because of volume profile, not because of anything else except for algorithmic handshaking. That's what's going to happen here, okay? And I'm going to show you what it looks like. Using that little shaded area in here, we're going to drop down into a 15-minute time frame. So the idea is the market's consolidating in here. It's consolidating with the expectation that it's going to allow for, quote unquote, smart money and their respective algorithms to handshake, dovetail together with what price is doing here. It doesn't fucking matter how many people are buying and selling. Doesn't matter how many orders are supposedly at these price levels on your depth of market. It matters not. All of that is a distraction. I'm taking your attention to what you need to be looking at, because everything else outside of price and time, you are literally being distracted. You're being fooled. It's a red herring. Everything is based on time. And when that price is in agreement with what you think it should be doing, drawing to liquidity. But ICT, you're talking about something that didn't happen. You didn't trade that. Right. What did I trade? What did I trade? NASDAQ. Did it perform? It performed beautifully, didn't it? But what is this indice doing? Similar things, right? It's following order flow. It's following the signatures that I'm teaching you and have taught. It's been out there for years now. In this area here, we want to study how price is being respected around specific discount arrays. So what's a discount array? A down closed candle, the midpoint of a wick, any fair value gap, or volume imbalance. Right in here, we have this wick. So you want to measure half of that. We'll just eyeball it. We'll say it's right there. Nothing too clean here on that. Down closed candle here. What is this doing? What's this doing? We have this shaded area. What did I just show you on the Dow chart? How do we disqualify an order block? If it's trading outside of the range that we're specially focusing on, what is it doing here? It's outside of that shaded area. So am I going to look at that as an order block? No, I'm ignoring it. It's not there. So where's the down close candle? There. What's the price level that's most important? The opening and mean threshold. So there's your 2 price points. In between, I'll teach it. In between the opening of an order block that's bullish here, there, and mean threshold, there's your body, okay? Did this wick through the lower end of that shaded area that we're drawing our attention to? No. Does it wick above it? Sure it does. But we don't care about that. That doesn't disqualify this order block, okay? From the opening down to the low, that's mean threshold, okay? Between the opening to mean threshold, in that area, that's where your order block entry can be utilized. That's where you're going to focus your attention on and where your entry would be ideally taken. What I do and how I use it is I will enter at that opening price or as it smacks that candlestick's body. My stop is below this low here, and I want to see, does it respect the mean threshold? What can it do? Mohawk through it. So you have to be allowing that to happen. But look what it does on this candle. It opens, trades down, doesn't even touch the mean threshold of that candlestick's body, and then closes up here. What does that tell you? You're on side if you're long. Don't get shaken out of it. Reach for that relative equal high, which is up here. These relative equal highs right there. See how clean that is? It's so pretty. It's perfect. Smooth edges, if you've never wrote it down in your journal, smooth edges like to be made jagged. Everybody will see this area here and say, oh, that's real nice. That's a resistance. And what are you going to put above that? Buy stops. Because traders want to see that as a breakout to go long, because that'll be what? Resistance broken. Or people that are short, that's where they're going to stop their trade out at. They're going to put their protective buy stop there. So that's where the market's going to reach for. And you see it doing it here. But inside these shaded areas, you can start breaking down price action a lot more refined than if you just simply ignored it, because a lot of wicks scare people. To me, it draws attention. It's like sharks in water that's chummed. Okay, you can in Fiji. I've been there, and I have not a rug burn, but I have a burn on my leg where I have had a shark rub me, and it left a scar. You can be next to these big porkers, okay, and you're in a cage. Even in a cage, you're scared shitless. They're so big, they look like Cadillacs come at you. They're big, and their scales are rough. And when they bump against you, it takes some skin layers off. It tears you up. But you don't want to be in a water that's chummed with fish guts and blood and shit, okay? So they make sure that you don't have any cuts, no nicks, nothing like that, because any little bit of blood will get these some bitches crazy. Wicks are like a chummed water. It's like an invitation. It's like a dinner bell for the sharks. Okay, algorithm's going to go in there, and there's going to be a lot of algorithmic price delivery, or not price delivery, price entries with algorithms in this area, in this shaded area. That's what's going on in here. A lot of high frequency trading algorithms are in that business. And retail traders and the things that they try to use to trade with, they're getting chopped up because they're not seeing it the same way. In here, what is this? Inside this shaded area, what is occurring in here? That high to that low. That's our fair value gap, right? Correctly identified, right? No. What's this? Volume imbalance. You have to include that. What is that small little deviation below it? A mohawk. To get that low price, which is this closing value, which is 32,803, it's got to go below that over here. and that's 32,801. So 2 points below it. That factors a spread, so that way to get this price booked for any algorithm that wants that price, the algorithm that books price has to offer that price and lower. Otherwise, the handshaking algorithm that the central banks use to fleece everybody that doesn't believe they don't exist, okay, that's what's going on. Okay, that's exactly what's going on, folks. That's what makes these markets go up and down. That's the real dance. And everybody else is a casualty of war. Yeah, sure, you might get a victory here and there. They want you to talk about how you won money. They want people to keep investing their money in their 401ks and all this bullshit, because that gives them a great source of food that never expires. That high frequency trading algorithm entity that handshakes with this rigged market, that's what's going on every single day. All day long, every fucking day, even on holidays. Even those little truncated times of the day or trading days when you can only trade till 1 o'clock or 12 o'clock and they cut the trading off, they're running then too. Their money never sleeps. But in these choppy points, these high frequency trading algorithms are chewing up everybody. And you think this is all noise. Oh, it's getting tight. It's getting tight. It's getting tight. Oh, the chop is real. The chop is real. That's funny shit. I love it. It's comedy. Because in that very moment, I'm in there taking trades. You will start seeing this when you start looking at it. But if you look at it as chop and you think, oh, this is going to harm me, or there's no rhyme or reason why price is doing what it's doing here, so therefore I should just don't do anything, you won't ever see it. You'll have a blind eye. You'll keep a blinder onto it. But everything's happening for a reason. It's all absolutely scripted. So once it goes down to the volume imbalance in here and trades down to this last down close candle, which is a bullish order block, here we start to rally. Then we have, what is this? This is a down close candle, right? That's a down close candle, isn't it? Sure it is. What's the opening price on it? 32,834. And where does this candle go to? 32,833. 1 point lower. Why? Because to get that price, it has to drop low enough so the handshaking high frequency trading algorithms can get that price booking right on that opening. But it's buying selling pressure, right? GAN had its day, and everything in GAN and Elliott Wave were working today, but support and resistance and the guppy patterns don't work today. Harmonic had to take a day off because Hurst cycles, that's the flavor of the day, right? You guys are fucking crazy if you believe that. Like, you honestly believe that Mickey Mouse level bullshit. Come on, man. You gotta wake up. If discussions like this and examples like I've shown all this year and last with real executions, okay, they're live executions, folks. You can't Mickey Mouse that shit. That's real. That's fucking real. You can't hide it. You can't discount it. It's not market replay. They're really happening. And it's the same logic being repeated over and over and over again. That should inspire you to dig into it deeper. Say, you know what? There's something else going on here. All these classic chart patterns, head and shoulders and bullshit, bull flags, that's all stuff that is simplified. So that way everybody thinks they can easily go out here and do it, and they risk their money. And then what happens? They don't want to talk about it to their friends. They don't want to tell anybody they lost money trading bull flags and head and shoulders patterns. So it perpetuates what? When nobody's losing any money, everybody only makes money. So new suckers come in and they use that same bullshit in books that does not fucking work. Okay. Now, it doesn't mean you can't make money trading with all that nonsense, because you can throw dice or flip a quarter, and if it goes heads up 3 times in a row, and that's a buy. If it goes 3 times tails in a row, that means you should be selling short for the day. If you risk very, very, very little money over time, you can still make money. Does that mean that you should trade that way? Fuck no. But there's a lot of people out there to do that. And that's essentially, in my opinion, what everybody else is doing with every retail thought. Any kind of pattern for pattern's sake, stupid. Moving average crossovers, fucking stupid. Stupid. That can't be the only reason why you're getting into a trade. It can't just do that. There has to be some idea of where the market's going to go. And everything, if you think about it, take a step back for a moment. Everything in your learning about trading has always been about getting into a trade. And this industry serves that shit up on a platter all the time. All these buy and sell signals, because the action part of it, that's the itch that you need scratched. I'm not going to fucking babysit you. I'm not going to sugarcoat it and say, here, watch my fucking videos. I'm going to give you entry techniques over here. No, I'm telling you where the market's going to go, why you can trust it's going to do it, and why you don't have to worry about the fucking algorithm stop working. Who's going to sleep better at night? The person that is wanting to understand how to get into a trade in dozens of different ways, or a person that knows where the market's going to go consistently every fucking week, every single week. This is where the market's going to go. I know this. If you understand that, if you understand where the market's going to go, why it should book that way, guess what happens? Guess what happens? That's when your retail shit is going to work in your hands. But see, nobody looks at it that way. They look at it, well, this is the pattern, this is the methodology, and I have to stick with my edge. You have to keep pushing your edge until it doesn't work. That's how you make an edge dull. That's how you make an edge dull. You overuse an edge, you make it dull. You have to know when to use that edge. You have to learn how to handle that edge carefully and safely. Otherwise, you're going to cut your hand off. And what good is it if you cut your hand off, you can't push the button, right? So anyway, that's enough about that. I can't stand a fucking Dow, to be honest with you. It gets on my nerves. Let's take a quick look at gold. Mix it up a little bit here. All right, look at that fucking mess. All right, so let's go to a daily. Now, right away, if you haven't already learned this from me, this is a market that I have taught many times that it's an event-driven market, which means it's highly manipulated. It's at a value that is extremely absurd, because gold should be like $20,000. Okay, that's what it should be at. Okay, there's not a lot of it right now, but they're keeping it artificially held at bay because all the central banks that they're getting ready to roll out, and the currencies that are going to come up and rival against the greenback that will be gold backed, the BRICS nations currency they're getting ready to put in play, that's going to be a gold backed currency, and that will be a death nail for the dollar, because we're backed by bullshit, a hope and a prayer, a fart. Basically, that's what it's backed behind. Okay, so there's nothing behind it anymore. The gold market, we talked about how it was likely to reach up above relative equal highs if we took that out. And then right over here, keep your attention right in there. And don't take my word for it. Go back and listen to the videos and the commentary. And we did, in fact, trade into it rather handsomely there. So let's talk about things from the perspective that things escalate overseas. Okay, say the tensions in the Middle East get really, really ramped up, and things get just really ugly. I do suspect that would cause gold to rally, but I don't think it would create like a meteoric rise. But eventually, when the BRICS nations really get moving with their currency that they're trying to get more nations to be a part of, once that's in play, you're going to see a steady rise of gold. It's going to be like a commercial bull market, basically. It's going to be one of those markets that just keeps going up, and people that try to short it gets grinded down to bits. We're not there yet, but that's where I see what all of you hope for Bitcoin. Gold's going to do that. That's what I'm saying. But it's only going to last a number of years, and then eventually it'll hurt a lot of people. But gold is going to be one of those movers that just keeps going up, keep going up, and everybody's going to try to look for reasons to go short on it, and it will fail them. But the catalyst, and here's the part that people are not going to use in context when they take my little sound bite right there, and they're going to say, look at this, ICT said this and this. The context is this: the BRICS nations currency has to be put in play, and more nations are part of it. Once that occurs, you'll see the dollar fall to that because there's nothing behind it. The only thing we can ever do was do wartime, or it's backed by oil. And Saudi Arabia is distancing itself from us, and it's allowing other nations to buy its oil outside of the dollar. So what do we have behind our currency anymore? Bullshit. It's smoke and mirrors. So it's important to understand that a lot of you crypto guys think that you have a safe haven in Bitcoin. They're letting you believe that because when the central bank digital currencies come out, your Bitcoin's getting sliced and diced. Okay, that's the way it is. They're putting it in futures contracts, and now they're doing ETFs or something like that. I think I read. Whenever that happens, that's absolute control. But you think you are in a free market, not a fiat currency. And it's fucking fiat. There's no difference between that and what the dollar is right now. Hope and a prayer. Hope and a prayer. Doesn't matter how many Bitcoin are in existence. It's an illusion. And you're buying it hook, line, and sinker. Period. It was used to invite and allow for the idea of something on the blockchain, which is going to be the thing that none of us want to be on. And that's all I'm going to say, at least on this medium. All right, so it really isn't any interest beyond this. Do I think that gold goes and rallies up into consequent encroachment of this wick here? Depending upon how fast we get there, that would be where I would look to see gold go to, right in here. And then if it's real quick and it closes above that, that would indicate that it's going to continue moving higher. But I wouldn't want to short gold, and I don't want to buy gold here. Okay, but gun to my head, I'm telling you, longer term, 10 years from now, gold's going to be significantly higher than it is right now. Would I want to buy it at this level right here? No. Do I think it's going to go higher from here? Yes. It's prone to have a lot of whipsaws, a lot of deep retracements, and that's why I don't like it. And because it's highly manipulated, to me, it's the equivalent of Japanese yen. And Japanese yen is, to me, a villain. It's the final boss in Forex because it's constantly, just doing things that hurts traders that want to hold on to it. And they do this like really wild spikes. Just look at it the last couple weeks. It's done a couple times. All right, so we've done ES, Dow. Let's look at Euro. Let's go to dollar first. We ain't looked at that. We should have started that, to be honest with you. But the whole core content of today's discussion, I wanted to talk about that trade this morning on the NASDAQ. And it's 2 o'clock, and I'm about 2/3 done. Getting your money's worth here, baby. You know it. All right, so we have this original fair value gap that we talked about. We're inside that again with a down close candle, which is potentially a order block. We also have that run below here with this. So this, again, because of all the things that are going on, and that's why I'm watching a lot of things, and this is the number one reason why I have cut short my 2023 trading to where I would normally be trading 2 more weeks. I'm not doing it because all the things that are happening all around the world, so many different wars potentially popping off. We got one, Taiwan's going to get invaded, before our election time next year. I'm not convinced we're probably going to have a normal one. The idea of Taiwan being invaded by China, that's still on the table. Our interest in defending Taiwan, militarily speaking, we've committed to do that. We're also heavily vested in the Middle East with defending Israel. And there's so many things popping off, and we are being thinned out in our country. We're giving away weapons. We're giving away artillery. We're not making any more. We're letting people into our country that are, who knows what they're here for, and we're not equipped to have all that stuff. So we are watching the destabilization, which what the U.S. is doing many times for a long time over the Middle East. We're watching that actually happen to the U.S. right now. And if you can't see that, then you're blind. And I don't know what the immediate ramifications are going to be between now and the end of the year because of all that stuff. I certainly know that I don't want to be in there taking on risks, because we could have an event that could be very problematic and shocking, where I don't want to lose $1 million or more. I'd rather not do that, right? So if I choose to stand on the sidelines and observe, I can be more calculated about going into this new year, because I have to be very careful trading next year too, because all this stuff isn't going to go away. So I have to be very careful and pick my shots and know what I'm doing when I'm doing it. And if I know I usually take the week right before Thanksgiving in the US, I don't trade after that for the rest of the year. I don't do any kind of trading at all. And very rarely did I look at markets, but when I started doing mentorships, I had to be teaching them, and it was such a drain. And I'm looking forward to having no connection to the marketplace until February. So my trading starts the first Tuesday of February in 2024. I won't be doing anything in January. I won't be doing anything the first week of February until we get to the first Tuesday. And that's the mode of operation I've used throughout my entire career. I don't want to do anything in those other times, because it's holidays. I want my focus to be on that. Your focus should be on that too. And where we're at right now with the dollar index and all the things that are going against it, my thoughts are this: the Fed would keep causing reasons for the dollar to go up. That would eventually, in their typical perspective, where people look at it, the way you fight inflation is that you drive down the cost of goods. And how do you do that? You raise interest rates, and that way homes aren't willing to be purchased because the mortgage rates are too high. So that cools the purchasing interest in real estate. Commodity prices are suppressed because the higher dollar causes the cost of manufacturing, producing, or housing, or insuring commodities. It causes that increase to be detrimental to those commodity producers or manufacturers or insurers. So therefore the price would go down. But we're in a weird, unique position in history right now where we are seeing controlled and orchestrated famine. So while the dollar can be going up, and it has been going up, commodity prices are saying we're really not going to go down because it's expensive for a reason. It's famine. Okay. Just a shout out to my charter members. Look at the sugar market and look at the cocoa market. Remember what we were looking at a year and a half ago? We're there now. Okay. So those big runs higher, look at meat, look at feeder cattle. Okay. Wait till you see we get into January, when you see what happens in the cost of ground beef and steak. You like to eat meat? Well, it's going to get extremely expensive going into next year. Really expensive. And the intent is for you not to do it. They don't want you eating meat. That's a delicacy. They want you eating bugs. Okay. So all those things are impacting the macro on determining what these markets are going to do on a longer term basis, which makes it more difficult. Not to trade, intraday, because we can thrive in intraday price action. It doesn't matter if anybody's eating bugs or not eating bugs. If the BRICS nation comes forward with its gold-backed currency and everybody else but the U.S., Canada, and Britain joins them, who cares? That's irrelevant, because intraday price action is intraday price action. There's always bread and butter to be made there. But on a higher time frame, like reading the daily chart on the dollar, that becomes harder. We can stay in a long-term, prolonged consolidation here. And other currencies could be allowed to trade wildly. And that's the control aspect of keeping the dollar in a consolidation. Your crosses like euro pound, yen, pound yen, Aussie, New Zealand, all those exotics, they will have extrapolated price moves if the dollar stays in this consolidation on the daily chart. So none of you should be looking at dollar-based currencies if you're a forex trader right now. You should be looking at the exotics, anything that's not with a dollar in its name. That's where your focus should be right now. Because looking at those markets and looking at their interest rates, which one has the higher interest rate? which one has the lower interest rate, and finding currencies that have a higher interest rate coupled with a currency that has a lower interest rate, and be long the one that has a higher interest rate in that currency. That's how you do it. Okay, that's how you trade interest rate differentials. But you just don't trade higher interest rate differentials for the sake of doing it. You have to do it at a time when the dollar's being in consolidation. Hello. So it's not just fractions. Okay, there's other things you have to look at too. That was the part that was left out of Steve Morrow's stuff from my 1996 concepts and study notes. You're welcome. That was tossed in for free too. So let's look at a 4-hour. All right, you see how we've already taken the sell side here with this drop? We're inside that fair value gap. It's the blue area here on the daily chart. I don't like the idea that they left this like that, but let me map it out for you like this. See it. Do you see how this area right here, all this sell side imbalance, buy side inefficiency, or SIBI, on this one candle is being framed with this candlestick's high, that candlestick's low. And if you extend it over across all these candles here, where is the inefficiency at where it matches both sides, the downside and the upside? Where do you see it at? You see it here, right? See that right there on this candle? So in other words, this part of this down close candle and this part of this up close candle, it kind of matches right there. You see that? Don't pay attention to that. Look at it here. This is discount. So this portion of this down close candle and this portion is up close candle, that is a balanced price range. It's further increased in terms of its balanced price action is we took this low out here and rallied back above. So what I'm saying is if we drop outside of this fair value gap that's in blue, I would demand, that's the real supply and demand. ICT supplies the mojo and he demands price does what he wants it to do, right? I demand the supply and I supply the demand. So if we have this area here as a balanced price range, if we trade outside of this, this needs to be the last line of defense, and it should not close above this lower level at all on the 4-hour chart. If it does that, that means that we're going to see lower prices on the dollar index, and it'll probably need to trade a little bit beyond outside of the consolidation it has on its daily chart. But as long as we don't do what I just stated here, which is close below this balanced price range on the 4-hour chart, then we're going to stay in consolidation. It needs to trade above these highs here before I would resume looking for order flow bullish. It needs to get above here. Because right now we're in no man's land. I wouldn't do anything dollar based at all. And this is the reason why I'm telling you this. You should not be in euro dollar. You should not be in pound dollar. You should not be in Aussie dollar. You should not be in anything with a dollar in its name. Nothing. Do nothing like that. So if you're a Forex trader, you need to be looking at the exotics. Anything that's coupled with another currency that is not dollar based. So that's your exotics. And the way you pick the currency pair that you're going to trade is you're going to look at a high yielding interest rate, a country that has a higher interest rate that is paired with a currency that has a low interest rate. And by doing that, you can be long the higher interest rate or short the smaller interest rate if it's the first of the currency name. For instance, like yen. Yen and I'm not equipped here to be able to pull it up on. I promise. After I'm done the live stream, I'll go on YouTube. Not YouTube. I'll go on Twitter and I'll tweet a screenshot of where you can see the actual interest rates for the purposes of using it for differentials. So that way, because we're expecting dollar to remain consolidated until something more accelerated in the war front occurs, because that will absolutely cause the dollar to start moving around. That's what I think's happening right now. They're holding it. They're trying to see what gives next. Where's the next shoe going to drop, right? So while they're doing that, dollar's not really going lower, and it's not really going higher. So it's allowing other currencies to move around, which allows for pursuit of interest, seeking yield. That's the mechanism that's always keeping things moving, seeking yield. But the dollar doesn't need to be moving to do that. So if you're a Forex trader, you want to be now taking your attention away from dollar until it leaves its consolidation on the daily chart in the framework that's outlined right here on the 4-hour. That's what I'm using for my personal reference. So it needs to do one of these two things for me to be interested in the dollar index again. Otherwise, it's the highest interest rate versus the lowest interest rate and couple that with Forex pairs. And then go long the higher interest rate currency, go short the smaller, shorter interest rate versus a stronger one. And I teach that in the core content. So it's on YouTube, by the way. All right, and now we can take a look at euro dollar. Now that I told you, don't touch it. Okay, and look what's going on with euro. It's in a range bound consolidation, right? Why? Because dollar is being held in consolidation. So there's not going to be a lot of discrepancy between the fluctuations between the two, because this one's heavily weighted with dollar. The dollar index has a lot of euro in it, so it's basically balanced, and it's going to be a real hard sell to get excited about trading long or short in euro because of the underlying pinnings of what I just outlined here. So that's a macro perspective, taking yourself way outside of a 1-minute chart and 15-second chart, because y'all think that's all I do. I have a macro understanding of the markets as well, but you only need to refer to them once in a while. And it takes a lot for them to change. So that's why I talk about quarterly analysis. So once I subscribe to a view for the next 2 to 4 months, I usually, unless something really pivotal occurs, I'm staying with that mindset, and I'm not trying to change my mind about it. So I'll just toss it out there for you. So there's no necessity to go down in the lower time, because I already told you don't touch the euro. And we'll take a quick look at the pound. Same thing. Okay, in the consolidation. Now, if you start looking at currencies like, let's take a look at, let's look at pound again, the beast. Okay, this market, you would want to look at like this consequent encroachment there, and we have relative equal highs. So you want to frame that going forward into the non-farm payroll. Which one are they going to reach for? The consequent encroachment of this wick, or the buy side imbalance? I'm sorry, the buy side liquidity up here. On a 4-hour, right there. Look at that. That's a big hole right there. So above all this consolidation, we're inside this fair value gap there. So it could do something like this. It could trade up here and then run right down here and take out the sell side here and clean up all this smoothness. I'm not trading it. It's something for you to study. Okay. Let's go back up to a daily. Pick another currency. Okay, daily chart. Consolidation. Would you trade this at all? I wouldn't. There's nothing in here that would get me excited. Why? Look exactly where we're at right now. Do you see how this high, that candle, and that low, that candle, that is essentially that's your trading range. It's in consolidation on a daily chart. And where are we at right now? Right in the middle of it. We've already traded to this inefficiency here multiple times. There isn't any inefficiency looking back over here. You have just this consequent encroachment of this wick, which has already been traded to there. So where's the high probability draw on liquidity? On this one? Nowhere. You don't do anything with this one. Let's get a real exotic one. All right, so we have midpoint right in here. So the sell side right in here, I think we could reach for it there. So watch that. This is where I would use a draw on liquidity for this currency. I would never trade this. But for the folks that are in Forex, I know you guys have been really wanting to see me do a lot more discussions on Forex. Sell side resting below here. All this trend line support, it's a phantom. We've already started to move. I apologize, but I don't really watch the Forex markets all that well now. But the draw would be right in here. That would upset everyone that would be using this fake phantom diagonal support, which is nonsense. Doesn't work. Let's look at and JPY. Note that right there. No fair value gap with the order block. We've already cleared buy side here, so that's a nice little area to see if it wants to draw down into that on the daily chart. And basically, I don't have the interest rates in front of me, but you would be better suited to look at the higher interest rate countries and their respective currencies and find the pairs that have those pairs where the first currency, like this one here, with the Swiss franc, if that had the higher interest rate versus the Japanese yen, then you could be long on Swiss franc because of the higher interest rate differential between Swiss franc versus Japanese yen, while dollar is in consolidation. If we were looking at a currency pair that had, say, for instance, the Swiss franc was a lower interest rate than the Japanese yen, which I don't think that's the case here, but I don't know for certain. I haven't been watching them for at least a year. I haven't looked at them. But if the interest rate differential for Swiss franc is lower than the Japanese yen, that would be a sell or a shorting opportunity while the dollar index is in consolidation. So the moves will occur in currencies that don't have the dollar in the name. When the dollar is moving, you do not want to be trading these crosses because the extrapolated moves are going to be in the dollar-based currencies relative to the interest rate differential. All right. Do me a favor on Twitter, if you guys can tell me if you can hear me still, because I'm not sure what just happened, but everything got froze up on my end. Just give me a 5x5 on Twitter if you can still hear me. Again, I don't know if you can hear me still. Thank you, Monkey. Thank you, folks. Appreciate it. I'm not sure what just happened. It just kicked me off for a second. All right, so here we have oil. Now, I've already tweeted if the Iran issue ramps up, if we get into a hot exchange between Iran, oil will go up a lot. As long as that doesn't happen, and it just remains a skirmish between Israel and the Gaza, that's not going to cause oil to go up. If Iran starts getting more involved, or if we start doing things more openly in Iran, that's going to cause oil to go up a lot. So, barring all that, we have this inefficiency down here. We could see it revisit that one more time. I don't want to sell short. If I was if I was an oil trader, I wouldn't want to sell short in this environment. Like, it's just too volatile. At a drop of a hat, anything can happen. It's like a powder keg right now. I'm more interested to see, not because I want to see anything happen because of war, but I want to see if we do start engaging directly with Iran or vice versa, or if Iran does something more direct towards Israel and it's obvious, then you know what's going to happen. The U.S. is going to step into that, which is why there's all that military equipment over there. One way, shape, or form, it's going to happen. They're going to see to it. So you just got to take a look at what we're not talking about anymore. And I'm not going to go through the laundry list of what that is, but there's a lot of things that everyone's been talking about for the last 2 years, 3 years. No one's paying attention to that stuff right now because all of this is the events that people are concerned themselves with. So, and it's meaningful because it's going to have an impact on all of our lives. But from the market perspective, I'm more interested in seeing, do we get that escalation in the vein of Iran being involved more directly, or becoming more active as a theater between it and Israel, because that's when we will join in. And we've have so much military over there now. The idea of anything reaching out and touching us, it's the stage is set now. All we're doing is sitting still, waiting for somebody to eventually hit us. And now we're in there, right? Where if we weren't over there at all, it's none of our business. So they're creating that stage for it to happen. And if it does happen, we'll start seeing oil go up. If we do see oil go up, I'm going to go up to a weekly chart for this. If we see oil rise on the basis of those types of things, this high back here, they're going to smoke through that. It'll rip right through that. Now, why would they want to do this? Why would tension over there be poked and prodded and caused to build up? All through this right here, okay, I had a $13 target on crude oil, and in one day we dropped down negative $40 a barrel. The oil pumps and the companies that were drawing the oil out of the ground were literally paying people to come get their oil because they just can't turn those drills and pumps off like a light switch. It doesn't work like that. So they were actually paying people to get their oil from them versus trying to sell it. And that's what caused all of this. Because the demand globally, because everybody was shut in through, the arm ticket stuff. That event caused a lack of demand for it. They've lost a lot of money here. A lot of potential sales. So while they made money here, yeah, this whole thing over there in the Middle East is a perfect stage to make up for all this lost money and new profits. So I'm of the opinion, okay, here's my opinion, and I'm going to close it because I'm hungry. I'm of the opinion that this whole push for electric vehicles is a bunch of bullshit, because you have to have fossil burning plants to make electric cars. Like nobody's doing the math on that. Like, you have to have fossil burning manufacturing plants to make electric cars. So I think this whole idea of trying to promote electric cars, and you can't have combustion engines sold in your country, and pollution. So this carbon footprint that everyone's talking about, how we have to reduce it, and we can't eat meat because cows fart. That's, to me, it doesn't make enough sense to warrant this level of change. I think it's a distraction. All these things are distractions for our real interest in being in the Middle East, which is to take ownership, even if it's by force, the oil that's there. And we have lots of oil in our country. We have lots of oil in Alaska. That's why Russia wants it back. But we're protecting and saving that for us. But we want to go there and get our hands on everybody else's oil, which is really what was going on when I was a teenager and we were worried about being drafted back then. We have a real problem here. And I think that this is a distraction from them making it seem like, we couldn't possibly be over there to try to get anybody's oil, because we're trying to go into electric vehicles. We're trying to do the green ticket deal where everything is, go green, Go green, go green. And nobody sees it coming like that if we're doing it like this. No one can say, oh, we're over there for oil because we've been promoting electric vehicles. We've been promoting the Green Deal, windmills and clean energy. And you can't have hamburgers and steaks because cows fart too much. In one volcanic eruption, which happens a couple times a year all around the world, one volcanic eruption puts out more CO2 than any of us can produce in decades. So the science isn't behind all this stuff. It's really asinine to see the level of ignorance that people have because they're not taught anything anymore. They're not really taught history. They're not taught real science, and they've spent more time in the last 30 years dividing us. And I think that the oil market is in store for a lot of manipulation. But if it goes hot in Iran, that's going to cause oil prices to go through the roof, and we could see levels that are unfathomable. I mean, I hear people talking about, oh, it could go $300 a barrel. I'm not going there, but I do think that we can go above 150 because that's where that's where we saw it last, right? So levels are always meant to be broken, and everything's getting expensive right now. Everything is. Look at your grocery bill, right? Why wouldn't oil be? Just because they're saying we got to stop making combustion engines. You're still going to have airplanes. These people that don't want you having cars, they're still going to have their private jets. They're still going to have their cars that run on combustion engines. They're still going to have their yachts that put out so much pollution, it's ridiculous. But we're to believe that everything's going to go green. You can't drive a tractor trailer that's electric. You need diesel engines to pull this stuff. And everything is supposed to be supported by our already weakened and aging electric grid. And they tell people, don't turn on your air conditioners when it's really hot. Don't turn all your air conditioners on because it might cause a blackout. But we're all supposed to have an electric vehicle. How the fuck are we going to charge them all up? If we can't run our air conditioner, how the hell are we going to charge our Teslas overnight all at the same time? Because we got to go to work tomorrow, right? You got to work. You got to go to the grocery store. You got to take your kids to somewhere, something. You got to move around, right? So the math ain't there. The math ain't mathing. And all these things are, to me, I think they're distractions because this whole thing's about us getting over there taking oil. And when we finally toss it in and say, yeah, it really doesn't work. It doesn't really have a benefit that we thought it was. We've done the math now, and we got to stick with fossil fuels. But by then, we got our drills in over there again. So it's my opinion, and I'm not trying to debate anybody because I'm sure there's people out there that know more about it than I do. It's just something that jumped in my head over the weekend. I'm thinking, like, none of this shit really makes any sense, and why would they keep pushing it, knowing it doesn't have any scientific weight behind it? But we're over there now, getting ready to start getting in the Middle East again. So I don't know. It's something to think about. I'm not interested in anybody else's opinion. So if you're going to tweet to me or make video responses to this in regards to that, I'm not going to spend time looking at that stuff because, like I said, I'm not trying to be an authority on it. It's just something that just jumped in my head over the weekend. It's going to be a catalyst for caution trading the oil market. But if things do get hot for Iran and they get more involved as a direct theater with Israel or with us, like for instance, we have a lot of battleships and artillery over there. If they allow, okay, and I think it's not outside the realm of possibility, the guy falls asleep, he doesn't have the reaction time to really shoot down that thing that ends up hitting one of those aircraft carriers. Man, it's on then. Like it's on like Donkey Kong. And then that's it. We have the invitation to the party and the dance, just like Pearl Harbor. So it's unfortunate. But I don't know why else would we be over there in inviting that type of thing while still, take a step back. Who really benefits from this? What are they hiding? What are they masking? so you don't really see what they're doing. And they keep pushing this green stuff all the time. Electric cars, electric this, electric that. And we have a grid in our country that is, we only have 3 grids, and they're very weak. And it doesn't take much for them to, have rolling blackouts and such. So if everything goes to electric, and we've not done anything to increase the efficacy of our grid in the United States, there's no way that we can have everybody on or even 50% more of our population to be on an electric vehicle, charging them all the time. Because as soon as summer comes and the demand for electric goes up, because everybody has to be cooled, it's not healthy for elderly people to be in high heat and such. And I don't do very well in heat. So, it's just something to think about. And again, I'm not trying to sell the idea that you should have that same opinion, because I'm probably wrong. But at any rate, this right here, they're going to try to get all that back with interest, because, I'm sure they wanted to have that profit and they had to give it away. And greed is what makes them move, right? So anyway, I had fun today sharing things with you. I had fun talking about the markets and outlining what I did this morning. And the lecture on market maker models will be posted tomorrow evening, which is Halloween 2023 at 9 p.m. Eastern Time in the United States. So I'll send the link on Twitter when it posts, so that way you guys can go take a look at it at your convenience. And until I talk to you again on Twitter, there won't be another video like this. There won't be any more like teachings after tomorrow's video. So all the videos that you have on this library, they will remain. I'm not taking any of it down, and I'm not taking my Twitter down after November 11th. But this is the ending, the closing chapters of Michael as Inner Circle Trader. I just want to go back to my boring life of being who I am as Michael. And ICT will only exist in the capacity that you see on this YouTube channel and the tweets that were put out there. Nothing's been deleted. Nothing will be deleted. And I wish you all very, very, very much success using the information. And I'm looking forward to seeing how the next person climbs up in our community, in our industry, and how everyone uses the information they make available. I never wanted to be a celebrity. I'm writing books that will be released once YouTube confirms and sends me the little plaque for 1 million. That means that they verified that they're not purchased subscribers. It's a legitimate 1 million subscriber base with real accounts. And I had to wait for that for the 100,000. We're real close. We got up there real quick with 903,000 followers already on this YouTube channel, which I am absolutely intimidated by that number. I've had a lot of requests for people to meet with me, to do teaching circuits, to go on tour, interviews, like formal interviews. I'm not interested in any of that stuff. I've done what I said I wanted to do. I've shared what I wanted to share. I want to go and just trade next year and try to, do something that as a young man I wanted to do anyway. But I think it's time for me to do it. And I want to focus on that and go back into just observing everyone else. It's not about me, and I don't want it to be about me. I want to be able to watch all of you as my students, be able to climb up and make something of yourselves with all this stuff and see what you do with it. And I'm really interested to see who the next person is, because I can milk this and keep pushing it and pushing it and pushing it and make it even bigger. But that's never been my real interest. And I think that'll communicate also that it's never been about me. I don't want to be looked at like I am. I've had fun on Twitter, but I don't want to be that hero. I don't want to be that celebrity status person. I enjoy being boring me, and I want to be back to that. So if I've been an impact in your life that's helped you grow as a trader and found found profitability. Uh, that's such a blessing. That's such a blessing to be used in that capacity. And I've done as best as I could with the experience and the know-how to be able to do what it is I know how to do and what my students have learned. I don't know another way I could have done it any better than I did. And I'm not saying it was perfect. I'm not saying because I don't think I am a good teacher in that regard, but I did my best. And my best for some of you might not have been enough. My instructions would be is spend some more time with it. It'll probably be beneficial for you not to have any more content coming from me. Because if I don't have any more content coming out, that means you have all the time in the world to focus on what you have in your hands already. And that's what I did. I stopped buying books and stopped buying courses as a young man. That's when I really understood, because I wasn't chasing a new shiny object. And that's a real thing, not just in trading, it's in everything. So I've enjoyed being a mentor. I've enjoyed being, part of this very large and eccentric community that we have as traders. But I don't want to be more than I already am. And I want you to hear me and understand this. I am writing those books. I am putting them out there. I am not begging you to buy them. I don't need you to buy them for me to pay my bills and live. I'm not producing any more YouTube videos. So there's no necessity for me to chase ad revenue. I don't need that either. What I'm doing that for is because I want people to see that these are my creations. These are things that I codified. And I want them taught correctly with the rules, the parameters around them. So that way you can see it, understand it from the author's perspective, not a personal interpretation, which is incomplete and it's not accurate. So I don't know what else to say other than it's been a wonderful experience. I've had so much fun being Inner Circle Trader. I've been so blessed to have so many people come into my life and share their experiences with me, what they were able to accomplish, what they're hopeful for, what they were doing with it when they made it. That to me is a huge testimony to not just simply looking at me as a conduit to learn how to make money, but once you start making the money, what are you doing with it? How are you impacting other people's lives? And some of you have taken it and just made mentorships. And I'm not proud of those things. And I'm not trying to kick sand in anybody's face as I'm walking out the door, but I never did this to create copycats of me. That was never my inspiration to do it. But I have a lot of students that have done things that are remarkable, where they've blessed other people. They've helped people when they didn't need it to be significant in the sight of other people. They've shared it privately with me. They don't go out there in public and grandstand and say, this is what I've done. I've gave this to charity. I've did this for that person. When you do that you receive your reward. You've done that for the sake of getting clout or recognition for it. And if you're going to do those types of things, do it anonymously. That's the better way of doing it. And I hope that all this newfound success that many of you have now, you don't let it go to your head like it did me when I was younger. You invite all the wrong people in your life, and you'll have to live your life like I did. Divided. Certain people know certain things, other people don't know other things. And it sucks. It sucks to not live the way you want to live because you invited people that are just trying to take from you. And a lot of you young men, young ladies too, if you take yourself onto social media and you broadcast that you're affluent now and you're making lots of money, there's always out there someone that's going to try to latch onto you for opportunity's sake, to try to take something from you that's undeserved. You got to be real careful. And it's not just make a lot of money. It's not just online clout. A lot of you wouldn't like to have the level of recognition where people come to your house knocking on your door just to meet you and leaving letters on your door and packages. You don't know what's inside these things. Like, I don't I don't want to open up a lot of the stuff I get sent to me, so please don't send me anything. It's dangerous. I don't feel safe doing it. And I feel uncomfortable saying those things because I know some of you are well-intentioned individuals. You just want to, because I've had some wonderful letters and gifts and cards and things sent to me. But I can't trust any of that going forward because the things are getting stupid like crazy. And I have a family that I have to worry about. And some of you, even in your well-intended decisions that you thought it was harmless to come visit me, I'm not comfortable with that. And you found out that I'm not real warmed up to the idea of that. And I told you that's why you don't want to meet your heroes, and you certainly don't want to meet me. When I talk to you in this capacity, I'm talking to you because I'm talking to my children. And you're hearing me talk to you sincerely because I sincerely mean what I'm saying to my kids. So that developed a rapport between us. And over time, as I learned more about some of you individually, and some of my personal students would make themselves more known to me, sometimes I would talk to them and I'll tell them, I'm going to be talking to you today when I'm talking about that. And you know who you are. But right now, I'm talking to you as my student base. I want my personal life to be exactly the way it was. I don't want people contacting me to do interviews, to do teaching circuits. Come over here. We want to do a keynote speaker. Do this. Teach us. Come to work for us. Teach our prop firm company. I'm not doing that stuff. I'm not doing any of that stuff. I'm not interested in it. I don't need any of that money. I don't need any of the notoriety. And I don't know how else to communicate it. Like, if I was here for that, I'd be staying around. I'm at the highest point that I've ever been. I don't want to be any more than this. I'm uncomfortable where I'm at right now. I'm introverted, and I only sound like an extrovert when I have the comfort of being in a bubble and I can talk openly. But I would never talk openly in front of anyone, like a crowd of people. I wouldn't do that. I wouldn't do it. It's intimidating to me. I'm uncomfortable in that situation, and I'm usually the most quiet person in the public setting. It took a lot for me to want to talk to all of you. It took a lot. But once I warmed up to the idea, you can see I don't shut up. Look at this goodbye. It's taken a long time, isn't it? So I want you to understand that I have done everything that I could do to make it reachable, something you could get if you put the effort in. I can honestly say that I could not personally, I cannot do it any better than I did. And if I try, it's just going to frustrate me because I already know that I've done as much as I humanly, personally can do. If you have not learned how to do it, just spend a little bit more time. How much time? Whatever you're willing to put into it. And if it doesn't get you to where you want to be at, then just submit to the idea that, I failed as a teacher and go along the rest of your life doing something else. And I wish you continued success, whatever it is. I don't want you not to be successful. I want you to be successful. And even if it's something somebody else is doing, it's nothing like what I've taught. I want all of you to do well. I'm interested in seeing all of you. I want to see the next person rise up and how do they conduct themselves. What do they do with it? Because there's always going to be somebody else. There's always going to be somebody else that comes up and gets a lot of the attention and stuff. And I want to give it away. I don't want to have this seat. I don't want this. It's very, very intimidating to know that thousands of people hang on any word that I post on a tweet or any word that I speak inside of a live stream. It's very intimidating, especially knowing that I've had people that had worked very hard to do these things and try to learn how to overcome their own problems, and they are not successful overcoming their personal problems. And a human being like I am, I wrestle with things. Put in a situation where you're potentially able to make a lot of money, but you haven't really fixed yourself yet, that's a recipe for disaster. And in today's climate, where everybody gets to be able to fault somebody else except for themselves, you know, maybe if it was a different time, maybe if it was in the 90s still, I probably would stay with it longer. But so many people have an entitlement mindset right now. And it's just so, it's everything's a victimhood mentality. And you owe me, you should have did more than this and you should have did more than that. You know, I don't do well with those viewpoints. Nobody would really. So I've made my core content available. It's on the YouTube channel. You want a study note or a study guide, go through month 1 through 12. There's your study guide. Go at your own pace. Don't try to do too much at one time. Expect it's going to take you a lot of time to understand it all. Listen to the live streams. Like today, I covered a lot of stuff today that was intended to be just in the books. But to prove to you, I'm not trying to sell books to make money, because I already know the first week it's out there, it's going to be all over Telegram. So again, don't buy my fucking book. Just go on the Telegram channels and you'll see it. It's there. I don't give a flying fuck how much money those books make. I don't care. I'm not doing it for the purposes of making the money. I'm doing it so that way it has an ISBN number associated with me. I'm the author, and you'll see I was the one that put this stuff out there in its proper context, the right way. And that's all I wanted, because every book will close with me saying what I'm about to say right now. I was not deserving to have this information. I didn't earn it. I did not deserve it. I prayed a lot for it. Not for this specifically, because I didn't know this existed. But I wanted to learn how to be able to see this stuff before it happened. And I am of the opinion that many of you are uncomfortable when I talk about God. Some of you may be atheists. Some of you may believe in a different God. But I believe I had very extraordinary experiences where I would have never known this otherwise. Look at it. Look at it. Really take a step back and look at it. When you hear these people say that this is rebranded retail stuff, there's nothing like this anywhere else. And there's no one else out there doing what I'm doing. Proving it with executions, proving it, annotating it live as it's happening. I went on live streams with you. I told you every individual candle, what it should do, what it shouldn't do. I can do this in a courtroom. I can do it right in front of the CFTC. I can do it every day of the week. I am not intimidated by that. I'm not afraid of that. And it doesn't matter how many times you say it's not real. It doesn't change the fact that it is. And believe me, while I was learning how to do this, I was astonished. It was scary. I'm getting butterflies in my stomach now all over again, thinking about, am I safe knowing this? And it took a long time for me to build the courage up when I was on baby pips, because they have no idea how many times I sat and thought, do I really want to start talking about this up here publicly? Do I really want to do this? Do I really want to do it? So I slowly just put one toe in the water at a time and see what's the reaction going to be. What's the reaction going to be if I do a little bit more? What's the reaction going to be if I do a little bit more? And where I'm at right now, I don't want to go any further. I don't want you wondering how much more there is, because it doesn't make a difference how much more it is, because I'm not going to teach it. You have more than enough. More than anyone would ever need. And any more was just going to just compound the level of confusion, decision on where you're going to settle in on your own. This is the thing you're going to trade with. This is the thing you're going to study price action and work around building your own model. And that's what I give you. I give you a way of reading price action. I didn't promise you here's a one-trick pony and it's going to make it easy for you to make money for the rest of your life. That didn't happen. I never promised that. I promised and guaranteed that I would teach you how I read price action. And if you learn this, you will read price action better than anybody else on this planet. Fill in the blank. And I see some of my students and what they're able to do in markets that I don't even trade. And I am so proud. I'm so proud. That's not arrogance. I'm very proud that you stuck with it. And for the folks that haven't got there yet, trust me, every one of those individuals, every single one of them had moments where they wanted to give up. I did too. Think about it. I was hearing voices telling me, look here, and I would see it. And then I would doubt it immediately. And then I watched it happen. Sounds crazy, right? Sounds nuts, right? But what happens when that voice is right all the time? You take notice, don't you? And then it became, wow, this is what I'm supposed to be paying attention to. Let me look at this. Let me look at that. Let me look at this. And you feel like someone's in the room with you. Not scary, not intimidating, but comforting. Like you're not alone. And when I wanted to throw in the towel and quit and never want to do anything with this stuff ever again, a level of comfort that I'd never known before, that's what was there. You might want to say, could have been an angel, could have been the Lord himself, could have been, I'm sure some of you probably think it's lunacy, madness. And that's fine. I've been trolled with it already. I've already shared testimonies, and it's made its way on YouTube, and people are making ad revenue off of it. I'm not going to do anything about it, because if I did, it means I'm ashamed of it, and I'm not. I'm not deserving of those experiences. I'm a sinner. I sin every day. You hear how I talk when I lose control? Every one of you are like that. Even the ones that are pious and pretend that you're better than me. You want to send me emails or text messages. You shouldn't do this. You shouldn't do that. Clean your own closet. I'm human. There's a lot of things I wish I could go back and teach sooner than I did. I wish there was some subjects that I wish I could talk openly about. I can't. And you're just going to have to accept the fact that that's just good enough, because I'm not going to teach any more than I am. I'm not going to divulge anything more than that. But the idea of it not working, that's been canceled. The idea of it not being transferable, that's been canceled. Anything being remotely close to it, that's just laughable. So in a lot of ways, it sounds like when I say these are my concepts, they're my concepts because I was given them to codify them, not from any one person, not anyone that we know in our day-to-day lives or in this industry. No one taught them to me. But when I say and I claim authorship of it, they're mine because I was the instrument sharing them with all of you. I am aware that they were gifted to me. I can't have this person stand next to me and say, here's this person. And I know I literally was looking at things over the weekend where people were making fun of the fact that I talk about God and I give him all the praise and the glory because it's his. He's in control of everything. Everything. Kingdoms are set up by him and kingdoms are put down by him. Kings are set up and kings are put down by him. Nothing that is it. It's not here because he doesn't want it to be. And if it's here, it's because he wants it to be. And I believe, because my heart was tore up, it wasn't until I asked him to show me with the express intent that I would spend my life helping other people do it. Think about it. We could talk about people that do interventions with people with drugs and alcohol, sexual abuse, stepping in as a counselor, that type of thing. And I think that, like Paul said, we have these problems in this world so that way we can have a testimony. That we had faith throughout that endeavor, that problem. We didn't lose sight of who we have faith in and carried us through it. So everyone's going to have a problem, right? I was never an alcohol drinker. I never did drugs. And it takes me to be deathly ill to even take an Advil. These markets are like a drug. And people get addicted to them. I did. I was throwing money at them when I was 20 when I didn't have it. I didn't know what I was doing. I was being reckless. That's no different from someone going out there with a needle and sticking heroin in their arm, like my own father did. I can look back when I was younger and complain about how I had all these adversities as a child. Parents didn't want anything to do with me. I was bounced around from different family members to technically raise me. I didn't have any advantages. I wasn't born with a silver spoon. No one gave me college tuitions for free. Everything I got, I had to work for it. And I had to defer a lot of wants. But I had problems adjusting as a young man. And I wrestle with a lot of things, and I've made this known publicly. And I know that these markets bring that out in me more than anything else. And I'm 51 years old now. And I don't want the last chapter of my life wrapped around what these markets make me feel like and what the opinions of others about me make me feel like. I'm always going to have people that don't like me. That's fine. That's not my issue. I've toyed with them online. The ones that hurt are the ones that they tell me they tried really, really hard and they couldn't make it work. And I can't do anything more than I've already done. That hurts. Because I feel like I'm insignificant. When my whole life has been trying not to be insignificant. I wanted to be significant because I wasn't raised in a family setting where I felt significant. So I was motivated all the time. I was always go, 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 go. Don't stop. Don't sit still. Don't rest. Look at my work ethic. Look at it. There's nobody out there performing more than I am. And that came on the heels of my own grandmother calling me lazy when she had no idea what I had already done in the first part of that day. I'd done more than an adult with 2 jobs when I came up to do something what I thought was spend the weekend. She wanted me to come and do yard work and move gravel. 1,500 pounds of gravel by myself at 11 years old. And then when I couldn't do it, to tell me I was lazy That put a fire into my ass. Nobody's going to tell me I'm lazy ever again. And that's when everything got supercharged, where I was interested. I stayed after school in my math class teacher. And as long as he stayed there, I stayed there, and I was teaching myself how to do coding. Any questions I didn't have answers to, he was quick to answer it. I learned how to code before I went to college because it was a pursuit. I felt like I needed to do that. And all the languages that I learned were obsolete by the time I got out. COBOL and CICS, mainframe operations. What the hell's a mainframe, right? You tell me you don't even know what the hell that is. C++ is the only language that I learned towards the end that was still today. But all those, even though that I didn't get a chance to use all that stuff in the working world, they were all parts that I believe the Lord used to put me together who I am. Because if I would have never learned how computer programs are written, what the logic is, syntax, all those things, how they come together for the function of making something deliver an output, I would have never understood the perspective of an algorithm existing anyway. Look how hard it is for some people to even understand what that means when we talk about an algorithm. It's hard to grasp. But for someone that's been in the information systems and tech, it's easy. Some of my better students are the ones that have come from that field. Computer science, information systems. I'm talking their language. They know exactly what I'm talking about. There was an immediate rapport right there. But for someone that doesn't have a technical background, it was very difficult to try to bridge that gap and bring it into a discussion where it was understandable and still hold your attention, because it's dry. It's very hard to communicate the level and depth of what these markets are doing on a day-by-day basis. And the more I learned, the more I discovered I didn't know anything. And that fascinated me. It scared the hell out of me, but it just promoted me to levels of tenacity that I'd never even had before. And I kept digging and digging and digging. More observations, more look here, more look there. And I would pray, and I'd say, I'm not seeing this. Why is this not doing what I wanted to do? What am I not understanding? Look here. For years, that's what was going on. Nobody sitting next to me, no one that I paid taught me any of this. No book has this information in it. And when you come out and you publicly display it, people that you don't know about, they recognize something. This looks like something, and they're interested in meeting with you. You don't want to meet these people. You don't want to be a part of anything they do. I believe that you're going to see a wonderful collection of students of mine that are going to come up.
And they're going to do a far better job after I've taught everything in those books. They're going to do a far better job of teaching than I have. I'm interested in seeing it. My only request is that if you're doing stuff like that, give me the opportunity to give all the glory to God because it came from Him. That's the only reason why I want you to point back to me. Because I would not be able to do this if it wasn't for Him. Like I watched that before I started this live stream this morning. And I think about how it was when I was younger and I couldn't do any of that. I didn't look at these charts with the open, high, low, and close bar and know what I was looking at. It's like hieroglyphics. I didn't know what I was doing. And I don't have that now. Confidence, it's not confidence. It's not arrogance. It's knowing. There's no words to describe it. Like there's, I know what it feels like for you when you don't have the ability to do it or see it. I had that. I had to work through it. Nobody was encouraging me outside of what I'm explaining here, which to some of you doesn't make any sense. But the more time I spend talking about it and trying to explain it, the more inadequate I am in trying to reach, because the words don't come close enough. And I don't want to give a stage to people to make fun of him. I love doing what I'm doing. I love sharing. I don't like being looked up to like that, though. So it's going to be a real adjustment after November because I've had so much fun. And I know there's all these side bets going on that I'm not going to leave social media. I'm not going to stay away, but I am. My wife needs to spend more time with me. And if she says that it's this or we're divorcing, understand that I'm not going to be here. I don't know what it's like to be not ICT anymore. Like I don't know what that's like. Like it's consumed every part of me. I wake up ICT, I go to bed ICT. And that's not to sound like I don't have things I can be doing with my wife. I obviously have all kinds of things I could be doing and places to visit and things to do. But when your entire whole existence is about the markets, and I thought about this, like everything, not dad. It's hard.